right, good evening, peoples. Good evening, people. Sorry, I had my microphone muted or up real high. All right, let's jump in here to Tesla. I wanted to get this out tonight because I think it's in a pretty good situation. We'll see how well it recovers and plays out. Um, so let's jump in here and take a look. So here is July 25. Boy, there was a heck of a lot of trades going on because as I anticipated, they closed out all of these, right, at a super, look at this, penny, 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 right? All with the big drop. So you do get good news with a big drop. I always just say, if it's going to keep dropping, 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 then it doesn't matter what you collect on the weekly because you're getting destroyed on the synthetic. But when you have a big drop and you do recover and you recover slowly, that's perfect. If you turn around and run right back up, then you get capped on your weeklies. But at least the synthetic recovers. So it's always a mixed bag on these. That's why I play the underlying or the 2x or the leverage. But in this, I'm waiting to see. And right now, the chart is showing kind of a potential gap fill, right? So it dropped way down. Now, you could get a bear flag. You could get just a little bit of movement up for 3 or 4 days and then fall more. The markets can dictate this, right? If the Nasdaq's going to continue selling off and some other things, then Tesla's sort of swimming in upstream, right? It's fighting the current like a salmon. But if the market stabilizes, isn't down, isn't necessarily up, then Tesla can navigate in its own direction without having to swim so hard against the current. I'm kind of thinking that they recover it, but let's see. So what happened in all these trades? Well, let me show you. I mean, it's a plethora of trades. So you see all of the BCs, buy to close, buy to close, buy to close, every one of those for a penny. So these the 265s lumped together, right? The 29,780 and the 1,005. But otherwise, we had a 282, we had the 30,000, whatever those added together, we had the 950, and then we had 310. So what did they do? They put on two new ones, right? Out on 8-2. So we went out and sold a 235, which is, above where we are. We're at 220. We bounced a little. I'll cover that in a minute. We bounced a little, got $2.91. We sold at 237.50. Good. They're at least laddering. The bulk is here where the bigger revenue, and they laddered up to a 237.50, and they got 229. So you can kind of see the difference of if they wrote the big one down here, yeah, it's a little bit further by $2.50, but your revenue drops, right? So they got about 10 million. So that's the good news. And by bouncing up, we lowered that. So we're for this coming payday, in my opinion, in really good shape. So let's go over here and look at their cash and their share count. Again, people buy it. I bought some Tesla, right? I didn't buy a lot, but I added 20% to my position at 1480. So that now I'm green on that. I'm not really looking to trade these, although you can trade in and out, but I am looking to add when they go down. But again, personally, I believe my money will be made by playing 2X's, options, do some of my own things on the underlying, because I don't like the cap situation, but I understand it from the income standpoint. So I'm willing to own some Tesla and say, hey, if it does what I think over the next 3 to 5 years, then Tesla is going to be just fine and it's going to pay good income. But I do see the limitations of an income fund. And since I'm an active investor, trader, swing trader, I'm not really a day trader, but occasionally I do day trades. And so that's the scenario. And I try and paint the picture for you guys out there that are different people. If you're just an income guys, I try and give you strategies to say, hey, you get nervous, the markets are going to crash and your NAV is going to drop 30% or something and you're worried, right? So I give you ideas to hedge, ideas to swing trade to help. But I get it that some of you are just playing the income. And there's a lot of different levels of people's abilities out there to comprehend. All right, so what happened? I got two entries here for these two trades as I mentioned to you. So that's why it's duplicated. So we, being Tesla, moved up 2.37, right? After falling 10.5%, we bounced. And this could be a recovery. I can see up to, I think, 240. I didn't add the chart, but I should just drag that over and show you on the chart. Hang on a second. I think I'll do that. Make this a little bit longer. But I think it's worthwhile for you guys to see. You know, charts speak to me after I've been looking at them for so long and so many years that, you know, somebody asked me a question. Sometimes I use stochastic, but sometimes I just look at my ability to see what the chart is telling me based on patterns, frequencies, okay? So here, for just a minute for you, so when you have a situation like this could end up well being a bull flag, right? But bull flags can go on for several, 3, 4, 6 months. And when you have a scenario where you're up here, you could have an A down, a B up, but a lot of times the B goes equal, doesn't have to, and then a C drop. The biggest thing is you have a big gap in here, right? If you blow that up a little and do, you know, 1 month, so that gap is right around 237. So that says to me that's a possible target here. Okay, so we could, over the next week or two, again, the markets could take this down further. If the NASDAQ starts to plummet and do something, I'm not thinking that, then sure, we could drop to 200 or something here, which is really, that 195 is pretty massive support if you draw a line across this. I'm talking to the chart now rather than labeling. But there's also some chance we come right up and fill that gap. And then from there, do we go down or go up, right? But most often gaps get filled. They don't absolutely have to. So I'm thinking we could ebb up. That also could be, you know, higher highs and lower lows. That also then some other news. Maybe the market then pulls down and it ends up being a little bear flag. So you look on charts for probabilities and patterns. Sure, there's stochastics. There's a whole lot of other things you can try and measure. But I kind of like parallel lines, right? I could draw a parallel line here. I could create a channel and say it could come up there and it could stay in a bull flag pattern for a period of time. And they could come out and say, hey, it looks like, you know, next June, we're going to launch this robot. And, you know, these things are news driven. There's all kinds of, you know, again, they have an FSD announcement in October, postponed from August. So who knows, right? But I do read the charts from that, from common patterns and probabilities. Okay, enough of that, guys. So we collected, if you add all these together, very close to 10 million, right, on these new calls. So based on that filling the gap, we could get up close, but maybe not go over, and probably not in a week either. So I feel pretty good about where they positioned it. So we definitely got 575,000 shares, right? The reason, again, I have these two lines is because I have to show different trades, right? So I just duplicate it. That's why these are exactly the same. Now, running total isn't, because we sold more, we collected more money. But if you look at cash and all that stuff, although, did I update? No, I updated the cash in my holdings, but I didn't update it here. So I will do that. Again, sometimes I have this stuff duplicated. Sometimes I reference the cell from one sheet to another. Sometimes I don't. All right, so let's do a weekly summary. And then let's go to holdings, because holdings always gives us more detail. So we got out early, right? So the ones we've written, we collected like 99.735 or something at a penny. We just collected the heck out of everything, as you might expect. Okay, so great job. I mean, not really. They just did their job, right? They did what they're supposed to do. They went and got that money. Okay, it was there to take, and if they hadn't done it, I would have been hammering them like, oh, why are you not picking that up, right? You should have. Okay, so where do we look? Well, with 6 trading days to go, we're 4.43. This one was written already, right? We're a little behind that guy. But it's okay. This one is huge, and we got, almost 7%. And this one we got almost 8%, all for next week, right? 6 more trading days. All right. You see that we bounced, right, from the 215 to the 220 and from 1475 to 1510. All right, let's go look at holdings because this tells us a lot. This tells us what's happening, right? I did update the cash. No, I updated here. All right. So these are all updated. These are the key things. So we now have 131 when we add these together. But this one dropped, right? This is the one I've been tracking with the 4-day. Because this was so insignificant, I didn't add it. It's a bigger number now, so I tell it to you. I'm just not updating my chart. Here's all the new stuff. As I said to you, we got 99.735 or something. We kicked booty on that one. All right. So we're now only at 125. And I say only because that's an improvement, right? We were 139 rounded, right? Now we're 125 and a half. So we're going in the right direction. As we move up, it'll get better. All right, so how did we do better on our collection? Okay, so what did we close at? 1510. Fair value based on the NAV and all of our assets is 1504. And you see this, right? These weren't particularly big. The loss wasn't, and then this is the big drop in earnings, right, that brought us down. So I have a feeling this thing's going to do better over time. I think the market is priced for perfection, and it just hammered Tesla. And that's to be expected in this climate. Let's look at our payout. Okay, so what happened here? This was around 184. Okay, so we collected we didn't collect any money here. That was yesterday, right? We didn't write any synthetics. We rolled early, but we rolled our weeklies, not our synthetics. That's the guy now that has 125 million loss. Well, we're showing 122.5 million gains, so that wipes that out, right? But we're bringing this down with these, right? So we get another week in here, we can get this to 12 million before. So that guy comes down. I don't see them rolling these because they're an 816. I see them paying us, but not all this money. Even if we drive this up to 210, 220, I mean, we got such a big share count. It really takes a lot of money, right? Even 10 million, right, that we just collected this week, that's only 20% of this number using 50, right? 1/5. So that's only 20 cents when you write that full 10 million, and we were a hair short of it. So when you get this big share count, and NVIDIA was in that mode, you got to really win a lot of weeklies to get much income. So I think they'll be conservative. I mean, the IV's only 50 something, but I do think that they should pay us $1 out of 2 plus. I was hoping for bigger, but again, I'll have to wait and see. But $1 on something now, granted, this is a bigger number now. I should just refer it to the cell here so it picks up. And then I'll do the math for you and show you, if they do the same IV of last month. So we're getting closer. I'll give you my prediction on all that. But if I had to do it now, my gut is $1. But that's going to be a higher IV because when they did $1 before, we were in the 17s, right? So let's see. Um, that's what I got for you, peoples. So I view it as pretty positive um, overall. And as I've said to you guys, medium term and long term, I'm very bullish. And I know opinions, everybody's got them, right? But I like their tech. I love that robot stuff. Again, that could be bigger than the car. But again, it's not a car, it's a computer on wheels. It's you like AI, massive use of supercomputer and AI. Yeah, the electric is going to have fits and starts. I mean, I don't own an electric and I haven't, but I don't hate them. I mean, they're amazing in some ways, and it's a technology that's continuing. Listen, think about the old days in the U.S., which I certainly lived through. I mean, you had an AT&T telephone. Do you know how well made those phones were? I get it. It's not a mobile phone and all that. But when you picked up the phone, it always worked. And it's fascinating. You go and you buy a Walmart cheap China phone if you ever literally want a home phone replacement. Most people have moved beyond that. But they don't last. They don't work. I mean, you go get a phone that somebody had from 40 years ago, and I know you car guys out there, if you had a bumper on a 50s or 60s car, that thing was rock solid, right? It wasn't this plastic kind of stuff that you have. And a lot of that has to do with price cost, right? Everything's more expensive. Inflation is here. Metals. You guys all know how I like GDXY as a future and why that fund over many years should do very well, right? It doesn't mean tomorrow or the next day. So anyway, long dissertation. Sorry about my rant, guys. But I see $1. If the fund manager wants to pay more, they can. I hope they don't be cheap and give us 80 or 70 cents when our bucket should have two something, right? I don't see them rolling that synthetic at this point. Okay, guys, that's what I got for you. Not financial advice. I'm not a financial advisor. Hang in there. Be calm. Nothing happens in a day. All right. See ya. Bye.